First, I'd like to say Happy New Year to everyone. We know this is fast becoming an old year, but thank you for joining us today for our webinar on the Payroll Protection Program. We are welcoming some guests today, our partners and co-hosts from the Georgia Minority Supplier Development Council, as well as the South Fulton Chamber of Commerce. And as you can see from the so without further ado, I'm going to ask Stacy Key from the Georgia Minority Supplier Development Council to please bring her greetings. But before she does that, I want to thank our sponsors, Comcast, EPCO, and Train Technologies for their continued support of all of our programs. Stacy Key, President and CEO of the Georgia Minority Supplier Development Council. Stacey.
Good morning, Donna.
Good morning.
And good morning, everyone. It is my honor and privilege to bring greetings this morning to kick off this important and critical discussion around funding. Thank you, Donna, for your leadership. Thank you to MBDA for putting this event together. We are grateful for the partnership, and we look forward to working with you throughout 2021. Just a quick thing, for those of you that may not be familiar with GMSDC, we're a 46-year-old organization that certifies, develops, and connects minority businesses to corporations to do business. We work with many partners in delivering what we do, MBDA, Strategic Partner, SBA, and others, SBDC, all partners in helping us help minority businesses throughout the great state of Georgia grow, thrive, and survive. And let me stress survive in these critical times that we have right now. So again, hope everyone enjoys the webinar today and the information that's shared. Please, as our business owners, please use this opportunity to get everything you need to make sure you understand what resources are available to you as you continue to try to grow your business. Everyone, be well, stay safe, and enjoy the webinar.
Thank you, Stacy. And we will have more programming in the future with the GMSDC, so stay tuned for that. And without further ado, I'd like to introduce the President and CEO of the South Fulton Chamber of Commerce. I'm really pleased that we've started this partnership. And Diane Matthews, you have the floor.
Thank you so much, Donna. Oh, it's such a pleasure to be here again, partnering with you in presenting this Payroll Protection Plan webinar. It is just a real pleasure for our chamber because we have so many businesses that were not able to receive the PPP the last go round. So we're really looking forward to them getting this information and being able to have a better outcome in 2021. As some of you may not know, the South Fulton Chamber is a 74-year-old county chamber of commerce representing the southern end of Fulton County. And we have 8 cities that make up South Fulton County, from East Point, College Park, Hateville, Union City, Fairburn, Palmetto, Chattahoochee Hill, and the new city of South Fulton. So it's lots and lots of businesses in these areas, predominantly minority-owned businesses, and they are really looking forward to getting this great information today. COVID-19 was such a challenge for so many of them, and we are really looking forward to them getting what they need, because they've all said this is exactly what they need. So we thank you for presenting the info today that is going to help so many of our members. We cannot thank you enough. And we appreciate all the support and everything that the MBDA and the SBA continue to do for businesses throughout Metro Atlanta, especially in South Fulton County. So to our members and other guests, we say just sit back and enjoy today's webinar.
So thank you, Diane. And to the audience out there, I'm really pleased that we have this partnership with the South Fulton Chamber of Commerce, as well as with the Georgia Minority Supplier Development Council. We have a vast network of organizations that we work with to help bring support and assistance to our companies, and they have been very, very supportive. I just want to really quickly For those of you who are not familiar with the Minority Business Development Agency and our centers at Georgia Tech, our mission is to help minority business enterprises, or MBEs, basically experience significant growth, create jobs, and become sustainable. Our goal is to have an overall positive economic impact on our communities and the nation. We are funded partially funded by the Department of Commerce Minority Business Development Agency, which is the only federal agency established over 50 years ago to focus on growing and strengthening minority-owned businesses. The MBDA has a national network of 40-plus centers and special projects across the country, again, all designed to work with minority business enterprises, that is, those companies that are owned and operated by people of color. We do have some specialty centers. We have 4 export centers that focus on different parts of the world, the Caribbean, Latin America, Africa, and Asia. And we have a federal procurement center in D.C. that helps companies with securing federal contracts. And then we have 4 manufacturing centers, one in Texas, Detroit, Baltimore, and here at Georgia Tech in Atlanta. So at Georgia Tech, we do operate 2 centers. We have our Advanced Manufacturing Center, which we launched in 2016, and we have our Business Center, which we've had since 2004. Here's our team. This doesn't represent our entire team because we've gotten some new projects that we've brought some additional folks and contractors on, but I'm not going to go through everyone's name. We have a core team of individuals, Brandy, Lauren, and myself and Aisha, who are core to Georgia Tech. And then we work with a number of small businesses to help us bring you support and technical assistance. So Jennifer Pasley and Anita Davis handles the financing. They are our finance contractors. We have Anthony Jackson, who is our manufacturing advisor, technical advisor, Jamarcus King, who's helping us with our Next Tech program. Dr. Billy D. Brown is actually a professor and head of programming over at the Georgia Tech Manufacturing Institute. And I did neglect to mention that Doreen Kincaid is also with us on our Georgia Tech staff. Tawan Isom recently joined from Isom Global Strategy to help us to direct our marketing and programming for our upcoming 5th annual National MBE Summit, which we'll talk about later. As a result of COVID, the MBDA received funding through the CARES Act, and so this program is part of that funding. We launched the CARES Act Assistance Program last year to provide technical assistance training and assistance to our companies. Since then, we've assisted hundreds of companies, not only with PPP, but just with technical assistance in terms of securing loans, the EIDL loans through SBA, as well as just assisting with specific types of technical assistance that a company may need. So without further ado, again, thank you for joining us. We're going to jump right into the program because we have quite a bit of information to give you. I'd like to introduce my friend and partner in crime, as they say, Terry Dennison, who is the Georgia District Director of the U.S. Small Business Administration. I'm sure many of you on the line know Terry for her work. She has been a leader in our community for years, and I'm pleased that she's able to join us today. Terry, it's yours.
Good morning, everyone, and it is a pleasure to be here with you today. I'm going to be sharing about the Paycheck Protection Program, the recent changes to it with this latest round, and also take out some time to share with you some of the other things other than PPP that is available to businesses that have been negatively impacted by the pandemic. Of course, here, this is the obligatory opening slide, that the obligatory legal disclaimer that our legal folks want us to put in. And basically all it says is the presentation is for informational purposes, and if there's a conflict between it and actual official guidance such as statute, regulations, and other formal guidance from SBA, the former is going to take precedent. And this is just basically the points, the flow of my presentation and the points I'll be making. Okay. With the first round of PPP, definitely there was a lot of discussion and concern around who was able to access the funds through the Paycheck Protection Program. And particularly were the smallest of small businesses able to access, as well as businesses in underserved segments, such as women-owned businesses, minority-owned businesses, veterans, inner city, rural, et cetera. So I think one of the things I definitely want to point out, and I do see in the latest legislation, the Economic Aid Act, is that there were definitely attempts to address some of those concerns. First of all, when the PPP application process opened on January 11th, the first priority was applications from borrowers who went through community financial institutions, or CFIs. And basically, your CFIs are going to be your nonprofit, mission-oriented lenders, such as community development financial institutions, minority depository institutions, SBA's certified development companies, and SBA micro lenders. So the portal was initially open to them exclusively, and as of this past Tuesday, it is now open for all lenders, regardless of size or target markets, to participate and submit their applications into the SBA lending portal. And basically, that's what I just told you, that it was a staged rollout with giving priority once again to the CFIs who tend to have clients mainly of those underserved markets. Okay, so what is a first draw PPP loan? Under the Economic Aid Act, there's actually two versions, if you will, of PPP, and I'm going to touch on them. I know that the presenter after me will probably drill down a little more into these, so a little redundancy, but I think it will be helpful to you to hear it from both of us. The first draw is basically, as it would suggest, for borrowers who did not receive a PPP loan under the first couple rounds under the CARES Act. It does include now some additional entities that I'm going to touch on in the next slide, I believe. The types of eligible expenses has been expanded. Originally it was, of course, first and foremost, and still continues to be, payroll and related expenses. And then besides those payroll expenses, you had business rent, business interest payment, and utilities. Some additional expenses are now allowed to be covered with the proceeds from the PPP loan. Borrowers now have a little more flexibility on their covered period, or the period in which they're going to use those PPP loan proceeds. Before, originally, on the first round, it was 8 weeks for everybody. Then when the CARES Act was amended back in June, it was 24 weeks for everybody. But people are saying, well, maybe 8 or 24 does not work for me. I need something in between. Well, with this Economic Aid Act, changes were made to allow you flexibility for defining that covered period based on what your business needs between those two parameters. Certain borrowers are also going to be allowed to increase the amount of their original PPP loan that they received prior to August 9th. And that would be basically borrowers, for example, maybe you had a partnership where the partners didn't include their compensation, or or if you were a seasonal employer, for example, there was a different formula, or actually I think a couple formulas for calculating the loan amount. Now there is a more simplified formula for seasonal employers that will probably tend to allow them to have more funds or higher maximum PPP. So there will be opportunities for borrowers in those situations to actually ask for an increase, something that the CARES Act did not allow. And the main thing to remember is that all applications, be it first or second draw, need to be approved by SBA by 11/59 on March 31st, 2021. Okay. Here is just talking about some of the new entities that are eligible for PPP that weren't previously, such as housing cooperatives, destination marketing organizations. I do want to clarify that these are like your tourist bureaus or visitors bureaus. It's not marketing businesses. So I know there was some confusion around that, so I wanted to definitely point that out to you. They've included in this round chambers of commerce, and then also eligible news organizations. Those could be broadcast, TV stations, could be newspapers, or public broadcasting. And then, of course, below are the entities that were originally eligible and continue to be. The second draw PPP loan, basically for businesses or borrowers that had received a PPP loan previously, they have to have no more than 300 employees. In the first draw, they can have up to 500, which was, of course, the number in the original CARES Act PPP. And the key is they have to have suffered a 25% reduction in gross receipts. So the idea being that if you're getting a second draw, you were probably more adversely impacted, so wanted to try and get additional assistance accordingly. Normally, if you're applying for PPP, the maximum loan is determined by, in part or largely, by taking your monthly average payroll cost and multiplying it by 2.5%. For the second draw, the maximum loan would be $2 million. But a provision has been made that for businesses in the accommodations and food services sector, if you're familiar with North American Industrial Classification Systems or NAICS codes, if the first two numbers are 72, then that business would fall under this group. And because the idea is that they were particularly hit hard because of the nature of their operations and the fact that, they couldn't have people come in, you had to even close down for a large part of the year, needed a little more assistance. So for them, that multiple is 3.5% versus the 2.5. And again, this is just kind of touching on what the eligibility criteria is. Some additional things to consider. You have to have used the full first draw or original PPP loan amount, or you will have exhausted by the time the funds from the second draw loan are dispersed. Once again, it's 300 employees as the maximum number of employees versus 500, and you have to have that 25% reduction in gross receipts between comparable quarters in 2019 and 2020. Basically, that means that, say your business was in operation all of 2019, and you want to pick, I want to look at my gross receipts in the second quarter or maybe let's say the third quarter of 2019. You'd have to then look at the third quarter of 2020. So that's what they mean about comparable quarters. Okay. A few things about PPP loan forgiveness that have been updated in the Economic Aid Act. Of course, that's one of the main attractions of the PPP loan is that there's the potential for that loan to be forgiven. Under the Economic Aid Act, there were some changes. First of all, if you've got an economic injury disaster loan advance or grant, originally those proceeds for the lender, the advance had to be taken out of the forgiveness payment that SBA pays the lender to reimburse them for the forgiven loan to the borrower. That will no longer be the case for the lender. For the borrower, very important, forgiven PPP loans are not taxable income. I don't think they were going to be treated, or at least the intention of Congress was for that to be the case. However, normally, just generally in terms of how IRS works, if you receive a windfall, like a partial cancellation or a full cancellation of debt, that is normally considered taxable income, and you would be issued a 1099, and you'd pay income tax on it. So under the Economic Aid Act, basically Congress made it clear that the forgiven PPP loans would not be treated as customarily the case with forgiven debt. There was also under the CARES Act, IRS, based on the rules under the CARES Act, or the original legislation, that they didn't want borrowers to, quote unquote, double dip in their mind. Basically, if you used your PPP loan to cover the expenses that were allowed under that program, you could not then take those expenses, which normally you would deduct on your income tax. You could not deduct them. And of course, it was kind of like, well, really, you're robbing Peter to pay Paul. What's the point if I got the expenses covered with the loan proceeds, but then I can't deduct them on my income taxes I normally would. So the Economic Aid Act took care of that. So if those expenses that were covered with your PPP loan proceeds will, in fact, be tax deductible as they normally would be. And then it mentions about the forgiveness application, a simplified application. This time is for loans of $150,000 and under. I think the initial attempt at something more simplified only applied to loans $50,000 and under. But the vast majority of loans, I know in Georgia about 89%, were actually $150,000 and less. So there will be a simplified forgiveness application that will apply to that categories of loans. Okay, and basically this is like, what do I do now? Of course, you would, be it a first draw, second draw, you would contact your lender. If you don't have a lender, we do have some tools at SBA.gov that can help you find one. You can also contact us, and our Georgia SBA information is there at the bottom, our phone number, email address, and if you're not following us on Twitter, our Twitter handle. To really kind of keep up to date on any additional guidance or information and to get the documents related to PPP, SBA.gov/PPP is the website. If you need additional assistance, maybe with completing the application, et cetera, you can contact us, once again, the Georgia District Office of SBA, and also some of our resource partners have been very helpful in helping applicants with the process of putting together the application. I know the SBDCs, specifically the Small Business Development Centers that we partner with UGA on, have been particularly helpful in doing this. And I think that may be, most important slide. Other things that are COVID-related, 19-related relief, SBA debt relief. Basically, if you already have an SBA loan under the 7A program, 504 program, or our microloan program, under the CARES Act, debt relief was provided so that 6 months of principal and interest payments were paid on those loans on your behalf. that has been extended under the Economic Aid Act. 3 months of payment for certain, February, March, April. And then after April, there's another possible 6 months, I think, of assistance, 5 or 6, if you are what they consider the most adversely impacted. So once again, for example, those businesses in the food and accommodation and some other categories, I know they're trying to nail out what are some of the other underserved qualifiers, but they will get additional debt relief. Just the regular SBA programs have been enhanced now through the end of our fiscal year, September 30th. So, for example, the 7A loan guarantee program, which is kind of our flagship, most broadly used loan guarantee program, the percentage of guarantee is 90% as opposed to generally 75% for those loans 150 and above. So, of course, higher guarantee, less exposure to the lender, and more than likely would help to boost your chances of having that loan approved. Also, our SBA Express, which is as it suggests, a more streamlined product, a guarantee product. Normally, it's a 50% guarantee for the lender. That has been bolstered to 75%. Once again, making it more attractive to the lender to approve a loan under that, using that vehicle. And normally that's a $350 minimum on SBA Express, but it has been increased temporarily to $1 million. This was done under the CARES Act, and it has now been extended through the end of September of 2020. So those are two things that are just being done with our regular programs. The Shuttered Venue Operators Grant, that would be for like performance venues. It could also be, for example, people who are promoters or talent promotion. It also includes zoos and aquariums, which they threw that in at the end. But basically, the idea was performance and entertainment venues were negatively impacted as well. And so these grants would be made available to address some of those needs. And then the economic injury disaster loans or EIDL, they were around in response to COVID-19 last year. Was supposed to end at the end of December, but now that authority has been extended to the end of December of 2021. Same terms, 3.75% interest for businesses, 2.75% for nonprofits, 30-year term, 1-year deferment before needing to repay, and early repayment without penalty. So all those things are still in place. On the economic injury disaster loan grant, you see I got it in a little different color. I'm going to mention this, but there's a big caveat. Under the CARES Act, you had the EIDL grants. Statute said you could get grants up to $10,000. There was some debate as to whether that's what Congress intended. Was it varying amounts or was everybody supposed to get $10,000? So under the Economic Aid Act, it does allow, once again, for these grants to be available. However, one caveat they added is that the business has to be in a low-income area, so it's not as broad. And also, what the agency is doing is going back first to those entities that received the EIDL grant and got less than $10,000. Those that presumably would be eligible in terms of being located in low-income areas would be able to get the difference between what they got and the $10,000. After that group, then they will look at applicants who had an application in queue when we ran out of funds for the EIDL grants in July of 2021. After those two groups have been taken care of, if there are funds left, then they will open it up to new applicants. But once again, that business has to be located in an economically distressed area or a low-income area. And with that, I believe that is my last slide. Yes.
Terry, thank you for that great presentation. Very informative. Actually brought a lot of new information to us, and we actually have a couple of questions in the chat for you.
Okay.
And the first one is, can we select the quarter that is at least 25% less than 2019?
Okay, repeat that again.
So that's for the second draw. There is a stipulation about the revenue in 2019 compared to 2020. So we have a question, can we select the quarter that is at least 25% less than 2019?
That's the impression I get, that you get to choose the quarter. So it would be to your advantage to choose the one, obviously, that you had the most loss in. The only thing is you've got to make sure that you compare it to the same quarter in the following year.
Got it.
And
Thank
I'll add
you.
one point of clarification there, just as having read the question, which is directed specifically about 3 months versus calendar quarters. And so there is explicit guidance that it is a calendar quarter is required.
Yeah.
That guidance was released on January 19th. There's an exception available for businesses who are on a fiscal year end other than December 31st. But for all other businesses, to Terry's point, you can select the quarter, but it is calendar quarter when doing that comparison.
Good point. In fact, I think I'll add that into the presentation next time, just to be clear.
Okay, and the second question, which may have just been answered, for second draw, our 25% reduction in gross receipts is for May, June, and July 2020 versus May, June, July 2019. Are we eligible? May, June, and July is not a financial quarter.
Yeah, it's not a calendar quarter.
Right.
Unless they are working on a fiscal year. Right.
Okay. All right. Are there any other questions for Terry? If so, please send them to the Q&A section at the bottom of right hand of your screen. I do see comments. I have a ton of questions. This has been hugely helpful, and I thank you all. As a business owner, I feel like I'm out in the water trying to find the bottom. Is it possible to speak with someone offline to help me navigate these options? Yes.
Oh, yeah.
We would be happy to work with you. Question from Julia Baker, is there a credit score limit for loans?
There is, the statute is silent about that, and I think the idea is, given the nature of the reason for the loan and the urgency of it, no. I think the main caveat would be if there's a bankruptcy, and I know there was a lot of legal questions around whether that made one automatically ineligible, and I think the new act does allow for a process in which a determination can be made if you are in bankruptcy. Can you still, you still be able to receive a PPP loan? So that at least has been addressed in this latest legislation.
Great, thank you. Well, Terry, it looks like you've responded to the questions that we had in the Q&A, so we thank you again for your very informative presentation. It's always a pleasure to have you, and we hope that you'll be able to stay around for the rest of the session.
Oh, I do. I will be around.
Awesome. Thank you so much. So next on the agenda, we have Justin Elangen. Justin is a CPA, a national expert, and serves as the partner in charge of APRIO's Paycheck Protection Program and Employee Retention Credit Services. We're very pleased to have APRIO as a part of this session. Donna Ennis is working very hard to establish a very strategic partnership with APRIO, and this will allow the Atlanta MBDA centers to have a tax expert that is a part of the team to ensure that when the different programs roll out, that you have top knowledge, firsthand knowledge about what's in the pipeline, and you receive accurate information. So with that, we'll turn it over to Justin.
Perfect, Jennifer, and thank you for the introduction. And Terry, I may need to borrow you some more times on some future webinars. It's fantastic to kind of have the lay of the land here before we get started in our conversation. As indicated, I lead our what we call our PPP and ERC services here at Aprio. PPP, obviously, we're talking a lot about today, and we'll make a mention of it while it not being the focus of today's presentation. It's ERC. Write that one down. I promise you it'll be worth your time. That's the Employee Retention Credit. We'll talk about what that means and how that relates to the Paycheck Protection Program. But you'll want to look at the Employee Retention Credit as another opportunity to increase liquidity for small businesses. Let me see if I can advance this slide. There we go. So let's go ahead and get started. Some of this is a little bit repetitive to the extent of what Terry covered, so I'll move through some of those items relatively quickly, or at any points of clarification or updates that we see in working with both borrowers of Paycheck Protection Program loans, as well as providing guidance and guidance to the lenders, those who are facilitating the Paycheck Protection Program, as that all is handled and facilitated with a particular bank, not directly with the SBA. We'll start with the PPP origination overview, right? That's what we're focusing on here, specifically the origination of obtaining a PPP loan, as opposed to dealing the details of forgiveness, which there's a number of nuances and complexities, but for now, again, we'll stick with obtaining PPP loans, talk about eligibility, talk about how to calculate borrowing capacity. That's all based on payroll costs, so let's make sure we define what those are. Or just the documentation requirements, as well as what's called the covered period and the utilization of funds, as Terry mentioned, in order to obtain forgiveness, because these loans can be forgiven in their entirety if the proper procedures, protocols, and utilizations of funds takes place within an appropriate amount of time. Very quickly here about Aprio. We are a CPA-led business advisory firm. We comprise of over 600 team members with offices up and down the East Coast, from Alabama, Georgia, several in the Carolinas, Tennessee, New York, and frankly all over the country, now that we're all working remotely these days. We serve clients in all 50 states and over 50 countries around the world. I mentioned CPA-led business advisory firm because we're more than just a traditional CPA firm. Sure, we do the audit, we can handle the taxes, but where we really thrive is supporting a business holistically through our various specialty services. And that allows us to really understand the business and support them in achieving what's next for that particular entity. We do focus in a couple of core industries that you see laid out here on the slide, but for the most part, a lot of the Paycheck Protection Program is agnostic when it comes to industries, perhaps despite, with the exception of retail and hospitality, as we talk about that further as we get into the calculations of obtaining loans and some additional opportunities for those in the accommodations and food services sector. I'll move through some of this because it'll be a little bit of a rehashing what Terry mentioned here, but starting with origination, as Terry mentioned, the portal opened a little over a week ago, and that's the SBA portal. Important to note that there's a difference between the SBA portal opens and when lenders are accepting applications. So you may have heard or seen differences in dates of when you can apply to your particular lender versus when the lender is actually able to submit the application to the SBA. And so, again, the SBA portal opened on Monday, January 11th for those obtaining first draw PPP loans, and then on Wednesday, the 13th, for second draw PPP loans. As of Tuesday of this week, The portal is now open for all lenders. But I want to reiterate, not all lenders are yet accepting applications for PPP loans. We've talked to several of them at various sizes that are still working through the processes, procedures, and facilitation of applications. So it's important to check with your financial institution if they're accepting applications and what their requirements are as it relates to things like documentation. Generally speaking, it's easier to go obtain a loan from where you have existing banking relationships, but it's not required. Many financial institutions are only facilitating PPP loans with existing customers. Part of that complexity comes in with what's called the Know Your Customer rule. That's an obligation of the bank. It's a regulatory requirement. And so applying and looking to obtain a PPP loan from a financial institution that is not an existing relationship of yours may require some additional documentation to be provided so that they understand the legitimacy of the business. Things like organizational documents, like articles of incorporation, and things of that nature may be required, even though that's not part of PPP documentation requirements. That's where that comes into play. But it's not to dissuade you from looking outside of existing banking relationships, or maybe the banking relationship you have isn't paying enough attention to you, isn't set up to accept PPP loan applications. And so there are a number of traditional financial institutions that are accepting applications from non-current customers. And one of the things that we're seeing this time around more prevalently is fintech companies. The CPA has a platform that they're using with the fintech company. There's Square, there's Intuit, there's PayPal. All of those are facilitating PPP loans, albeit not your standard and traditional financial institution. Rehashing a little bit of what Terry said here, and we're really focusing on what we see the broader market here. Terry hit on the specifics of all the businesses that are now eligible for obtaining first draws on a PPP loan. What we found here, and you see just 501c6 highlighted, based on the community that we've been speaking with, that seems to be the prevalent one. But Terry's slide was fantastic, and how it laid out who's eligible. It's bifurcated on this slide for a very specific reason. Businesses that have always been eligible to obtain PPP loans. Those were businesses with 500 or fewer employees. And that does include affiliates. There are affiliation rules that apply to the SBA 7A lending program. That's what governs the Paycheck Protection Program. So you would need to consider the number of employees across all affiliated entities. Generally speaking, you'd start with understanding a 20% ownership interest in the particular business that's applying, and then see what controlling interest they have in other entities to determine whether or not they are affiliated. It certainly gets a little more complicated, so if you find yourself in that situation, consult the affiliation rules you can find on the Treasury website, or consult with your advisor. Now, there are certain exceptions made for businesses in the accommodation and food services sector. So that's things like your restaurants, hotels, bars, right? NAICS Code 72, as Terry told us earlier. In that situation, the number of employees is actually by location, despite there may be common ownership across multiple individual legal entities. When we refer to the number of employees here, it's headcount, part-time, full-time, even an owner. So no individual business can be applying with fewer than one employee, be it for the sole proprietor owner. And that number is as of the date you're submitting your application. Now, 501c6 organizations is the one we're highlighting, but again, as Terry mentioned, there are certain news organizations and others that are made eligible for PPP loans for the very first time, right? They were not eligible prior to the signing of the Consolidated Appropriations Act, which occurred on December 27th. Within that, that's where the Economic Aid Act comes into play. It's kind of a subsection there that governs a lot of the components of the Paycheck Protection Program, or at least its latest amendments and terms. And within it, this is expanded eligibility. 501c6 organizations being one of those opportunities to go obtain a loan for the first time. Limitations here are a little bit different. For 501c6 organizations, it's having no more than 300 employees. And there are certain restrictions associated with the level of lobbying activities that that business engages in. No more than 15% of gross receipts or expenditures can be associated with lobbying activities, or a cap of $1 million as a flat dollar amount. Now, second draws is going back to this gross receipts concept, and that's actually one of two components. This is one where we've seen some updates and guidance throughout this week, actually, within the last probably 54 hours, I would say. To be eligible for a second draw, you have to meet a series of criteria. And this is all of the criteria, not one, not two, but all of the applicable criteria. For starters, it's addressing headcount again. I told you a moment ago, for first draws, it was 500 or fewer employees. For second draws, it is 300 or fewer. Once again, we do still have exceptions for businesses in the accommodation and food services sector. It's still limited by location for those. Again, with a NAICS code of 72, that can be found on their tax return. But in addition, you have to have that 25% reduction in gross receipts, right? Terry told us that. There was a good question that popped up that is a very commonly asked question. Is it any quarter, any series of 3 months, right? A 90-day segment. And that was something that was clarified just 2 meetings ago, where, again, indicated it is calendar quarter for most businesses, unless you're on a fiscal year basis, other than December 31 year end. And it's any quarter in 2020 compared to that same quarter in 2019. Again, that assumes you were in operation for all of 2019. As Terry indicated, you have the opportunity and you only need to meet this criteria for 1 quarter. So keep that in mind as you're going through your analysis. If your business was not in operation for all of 2019, then there's a little bit more details and opportunities for comparisons on declines in gross receipts, and those are listed within the guidance on the SBA and Treasury website. You also must have used or plan to use by the date that your second draw would be dispersed all of the funds that you received from the first draw. You're not going to get a second one if you've not utilized the first one. There's this term called the covered period. That's this duration of time that you have to incur and pay eligible costs for loan forgiveness. We'll talk about that a little bit further detail later, but that's up to 24 weeks from the date that you receive your funds. This eligibility criteria does not specify that you had to have used all of your first draw funds within that 24 weeks. It is just by the date that your second draw would be dispersed. Now, an area that we've seen quite a bit of confusion and actually some diversity in practice within the lending community is what about that first draw and forgiveness? The guidance does not state that a borrower would have to either have applied for or received forgiveness on their first draw in order to be eligible for a second. Again, does not say that that is a requirement. We have seen a couple of banks actually indicate to their customers that if they've not received forgiveness on their first draw, that they would not accept an application for a second draw. That is counter to the guidance that has been put forth. So if you've obtained a first draw, you're trying to figure out what to do right now, think about eligibility for your second draw first, then come back and address forgiveness, because you've got more time to address applying for forgiveness than you will for applying to obtain a second draw. Now, gross receipts, broad term, what does it mean? What's here is kind of outlined based on the guidance, and there's some nuances as it relates. Effectively, gross receipts includes all revenue. Keys here, received or accrued in accordance with the entity's accounting method, regardless of form or source. That's brought up a lot of questions. Cash basis, accrual basis, maybe I maintain financial records one way for my business, but my CPA, when I do our tax return, does it another way. What do I use, and how is that reported? There's no further clarification beyond this. It's in accordance with the entity's accounting method, regardless of form or source. One of the things that we see frequently within the Paycheck Protection Program rules is this term called good faith. Certainly would apply here as everywhere else. Don't manipulate your records to follow one way or the other so that you can display the decline in gross receipts for eligibility. And because there's the opportunity to do it in accordance with the entity's accounting method, just make sure you do so in good faith. Now, this includes revenue from the sales of products, services, investment income, right? Interest, dividends, rents, royalties, fees, commissions, you name it. For not-for-profit organizations, which maybe we look at a little bit differently here, we just got some clarification on the evening of the 19th. That does include all your contributions. It includes your program services, and it does not provide any exceptions for restricted funds. So restricted donations would still be included in gross receipts calculations. Now, for sole proprietors or those that are self-employed, right, you file a Schedule C within your tax return to report the activities of your business. For purposes of gross receipts, you're looking at gross income. Going back to my comment previously on affiliates, for purposes of gross receipts, if you have those affiliated entities, you do need to evaluate a decline of at least 25% across all of the affiliated entities. And that would be a qualifier for whomever, how many that may be. It's an all in or all out, but you must consider gross receipts across all affiliates if that's applicable. Important item of note for those applying for second draws is forgiveness or receipt of a first draw PPP loan is not included in gross receipts. That's specifically scoped out, as well as the EIDL, that Economic Injury Disaster Loan advance. That is not included in gross receipts for purposes of this calculation. Now, also included on first draws, Terry mentioned this opportunity for loan increases. And that applies for certain specific situations. If you fall into this, now you will submit, or will be looking to submit, two different loan applications. A first draw, which falls on one form, the 2483, and a second draw loan application, the 2483 SD. Loan increases are available under these conditions. The borrower did not receive forgiveness by December 27th. Significance of that date, that's the date that the Consolidated Appropriations Act was signed into law. And then it would apply to businesses who previously returned some or all of their first draw PPP loan funds. Perhaps they didn't accept the full amount for which they were eligible. We've certainly seen that a number of times. Partnerships, really good example. In the beginning of the program, early April, when everyone was kind of rushing to the door to apply to obtain a loan, there wasn't full clarity as to how the partners in a partnership would be reported. As recipients of the K-1, would they file on their own, as they generally considered self-employed, for income tax reporting? And so many businesses, partnerships specifically, did not include partner compensation when calculating the amount of their loan. And then subsequent guidance was released in probably the middle of April that indicated that partner compensation should have been included on that partnership's application. Those businesses could now go back and request an increase in their first draw. Seasonal employers, another good example there. Calculations are very different as you look at the opportunities for seasonal employers We'll talk about what those calculations are for I call the general business community. And you'll know why that's different for a seasonal employer, because that does allow a selection of a particular number of weeks within a defined period of time, which would generally be the period of activity when you have payroll instead of those dormant months being included. So calculating borrowing capacity, I'll move through this one relatively quickly here because Terry touched on this. For first or second draws, unless you're in the accommodations and food services sector, the calculation is based on 2.5 times the average monthly payroll costs for 2019, 2020, or TTM, trailing 12 months. At this point in time, trailing 12 months is effectively the exact same as 2020. That is at the election of the applicant. All the permissible options. For second draw PPP loan applications only, and specifically for those in the accommodations and food services sector, that multiple is 3.5 times that average monthly payroll cost, not 2.5. Now, there's a cap on the size of the loan individually, as well as for corporate groups. So first draw PPP loans, the individual loan cap is $10 million. And within a controlled group, it's $20 million. That would have come into play with that affiliation situation. Second draws, that's been reduced. And individually, the maximum amount of a second draw PPP loan is $2 million and $4 million for the corporate group. It's important to note that's evaluated independently. So if you're going for a second draw loan, let's say you received $1.5 million on your first draw, but that does not mean you're limited to only a $500,000 loan on your second, because that would be $2 million. They are evaluated independently of one another. So understanding payroll costs is important because this is the base of calculating your loan amount. So what's included? It's broken down into two pieces, cash compensation and non-cash compensation. From a cash compensation standpoint, it's your wages, it's bonuses, it's tips, it's commissions, severance, things that we think of when we think about payroll costs. It does also include certain types of paid leave, vacation, family, medical, sick, but paid leave being important. Now, this cap at $100,000 per individual is certainly important because the excess amount, right, beyond $100,000 should not be included in calculating borrowing capacities. It doesn't mean that an employee would not be included in the calculation. If they were making $150,000 a year, you would just only be able to utilize the first $100,000 and then calculate the monthly average and multiply by 2.5. It's important to note that if that's applicable to your business, as a procedural notice was just issued earlier this week, or maybe it's the end of last week, that indicated what's called excess loan amounts. If you over-calculate your borrowing capacity, that is going to be reviewed later, even if the loan made it through its origination stage. If it is subsequently identified that the amount that you received was in excess of what you should have received, that will not be forgiven. And if forgiveness has already occurred, let's say on your first draw loan, and it's been identified, you will still be required to pay that back now. So ensuring that you calculated this properly is certainly important as you manage cash flows and your financial situation. Now, non-cash compensation is also included here, but specifically the employer's share. Think about this as I go through these items for your employees. It's a little bit different for owner compensation. It's the employee share of group health care, defined as health, dental, vision, life, and disability. It's the employer share of payments for retirement benefits, right? The retirement plan contributions may be made to a 401k plan. And then it is state and local taxes assessed on compensation. Emphasis there, state and local taxes. This does not include federal payroll taxes. This is your SUTA that you'd be thinking about. Once again, employer share only for those non-cash compensation categories. Owner compensation also is capped at $100,000. Let's take a look at where you would find information related to owner compensation, and it's different depending on the type of business. It may be from income tax reporting purposes. So sole proprietors, right, Schedule C filers. You find this amount for calculating payroll costs on your Schedule C, and specifically net profit, which can be found on line 31. Important to note, if line 31 is a negative, you are not eligible to obtain a PPP loan if you have no employees. So just you're the only individual at your business. If that number is negative, there would be no amount available for obtaining a PPP loan. Partnerships and LLCs, right, those taxless partnerships that file Form 1065, where do I find owner compensation? I go to the K-1. And I look at that for each individual owner. Most complicated comes into play when you think about partnerships. You've got to go to net earnings from self-employment. It's box 14A in the Schedule K-1. You've got to remove Section 179 expenses and deductions, and then multiply by 0.9235. Fortunately, it gets a lot easier for an S Corp or a C Corp. You just go to the W-2. But once again, it's all capped at $100,000 for owners, as it is for employees. That's building up your aggregate amount for either 2019, 2020, or your trailing 12 months. And then you'll generally divide by 12 and multiply by 2.5. Now, documentation requirements. Pay a lot of attention to this. This is what can cause challenges in obtaining a loan. It can delay the process. And this is really important for those of you that already have funds or are thinking about forgiveness. Documentation requirements being the number one cause of rejections, and that goes back and forth between borrower and lender, or in this case, applicant and lender. So come prepared when you go to your bank, knowing the information you'll be required to submit. So payroll costs, as we just spoke about, is the basis for calculating your maximum loan amount. And there's some very helpful guidance on the Treasury website for calculating maximum loan amounts by business type for either first and second draws. But what you use for substantiating that to your lender is Form 941s, state quarterly wage unemployment insurance tax reporting, right, DOL-4s, for those of you here in Georgia. And that would apply to each quarter for 2019 or 2020. It depends on the period that you use for calculating your borrowing capacity. So you don't need to provide it for all. If you're going to use 2019 payroll to calculate borrowing capacity, provide 2019 records. Same would go for 2020. But the important thing is or equivalent payroll processor forms. That can come into play for instances of a PEO. There's a variety of payroll service providers, ADP and Paychex and Paycor, that have all developed PPP reporting so that you can have the information available to you at the click of a button on demand. Those are acceptable documentation for applying to obtain a PPP loan. Of course, for the owner compensation, that would not fall on a 941, right? Our C Corp and our S Corp owners, because they're paid via W-2, their payroll is on these payroll processor forms or the 941s. But sole proprietors, the owner income sits on the Schedule C, or partners in a partnership or members of an LLC that are taxed as a partnership, that comes from the K-1. So that supporting documentation would need to be provided as well. And gross receipts, again, that only applies for second draws. The information available to be submitted is tax forms, right, annual tax forms, or copies of the applicant's quarterly income statements or bank statements are all acceptable options. This actually was just expanded the other evening to include audited financial statements. And if you don't have audited financial statements, you actually need to attest to internally prepared financial statements. But it is important to note to continue to promote access of capital to smaller businesses, right? $150,000 or less, which by the way made up 87, I think it was, % of all loans funded to date, or at least up until this new wave of funding, is this administrative relief option. If you're applying for a second draw and your loan on your second draw is $150,000 or less, you will be required to provide gross receipt substantiation, but not now. Not when you apply to obtain your loan. You can do that during the period after you've received your funding or when you apply for forgiveness. Now, selecting your covered period, Terry covered earlier, which is currently any period between 8 and 24 weeks from the date of loan disbursement. One moment. Apologies, this is about the 200th webinar I've done in about a year, so I think my throat's finally catching up to me. So the usage of funds, and this is a change that came about, which is this expansion of non-payroll costs. Previously, there were 4 types of covered costs, and not only covered costs to be eligible for forgiveness, but these are the only permissible uses of PPP funds. You must use them for these intended purposes, and you actually check those boxes when you apply to obtain your loan. Well, that was expanded with the Economic Aid Act. Again, that's a subsection within the Consolidated Appropriations Act that was signed into law on December 27th and applies to all PPP funds. These new costs are helpful for a variety of reasons, not only in increasing a business's ability to obtain full forgiveness, but provides other opportunity to leverage things like the employee retention credit. And on the surface, they're titled as covered operations expenditures, property damage costs, supplier costs, and covered worker protection expenditures. What does that mean? Payroll costs, understand we've covered that one. Mortgage interest, relatively self-explanatory. Rent, that applies to rent or lease payments for any real or business use personal property. And utilities, water, gas, phone, electricity, and transportation, really, that's being tolls. But these others are a little bit more ambiguous. Covered operations expenditures, that's your software cost to run your operations, whether cloud-based or local software. Inventory system management, point of sale systems, HR systems, accounting systems, to name a few. Property damage costs has to do with what we'll call the civil unrest that took place in the middle of June. I'm sure we all remember. But these are specifically the amounts that were in excess of any proceeds from your insurance claims if you have filed one. Supplier costs has to do with contracts that were in place prior to the beginning of the covered period. If perishable goods are essential to your business, think of your restaurants, there's some further opportunities there within supplier costs. And then covered worker protection expenditures, I like to use plexiglass as the example. We've all seen it. These are the different costs the business has incurred to provide certain safety measures related to COVID-19. And those will be eligible for forgiveness and eligible uses of PPP funds. It's important to note that there is a requirement that a minimum of the eligible costs reported on an application to obtain forgiveness is 60%. Thereby, a maximum of 40% can be used on non-payroll costs. Now, looking at the timing and the loan terms as it relates to the PPP loan, it's a 5-year maturity date. There's interest at 1%, and that begins at the date that you receive your funds. But it's important to note that when you arrive at the opportunity to apply for forgiveness, what's going to occur any time on or before the maturity date of the loan. Any interest associated with the amount of your loan that's forgiven is also forgiven. So, easiest example, you apply for forgiveness on your entire loan, all interest will be forgiven as well. And then there's this concept of repayment, right? It is a loan at the end of the day. It is unsecured. It's non-recourse, no collateral, no personal guarantees. But a repayment does take place. It is deferred for 10 months from the end of your 24-week covered period if you've not yet applied for forgiveness. But in the event that you do apply for forgiveness and only receive what we call partial forgiveness, you couldn't utilize all the funds, there are some other factors that could cause you to have a reduction in loan forgiveness, so there was still an amount left over, then you would begin making repayments at that point in time. The thought process that I'm going through and advising my clients and others in the small business community, start right now thinking about whether or not you qualify for obtaining a PPP loan, whether it's a first or a second draw. Find a participating lender, gather your documentation, run your calculations, and apply to obtain your loan. The next item I'm thinking about and immediately thereafter is the employee retention credit, which was now made available to recipients of PPP loans with this signing of the Consolidated Appropriations Act. Won't go into a lot of details here, but note that it provides a benefit for 2020 of up to $5,000 per employee. And then as it rolls its way into 2021, that benefit can be up to $14,000 per employee. That's called the Employee Retention Credit. It can now also be utilized and leveraged by borrowers of PPP loans. You just can't use the same wages for both purposes. So there's a little bit of strategy and guidance. Encourage you all to look into that and speak with an advisor about your eligibility and how to claim your credits. Then I'm coming back, step 3. Then I'm thinking about loan forgiveness on my first draw. Each told me I have plenty of time. I have up to my maturity date. And repayment is deferred for 10 months from the end of a 24-week covered period, which for even the earliest recipients of PPP loans, that wouldn't be till August of 2021. So the takeaway there, you have time for forgiveness. Think about applying for a loan, think about the employee retention credit, and then circle back around to loan forgiveness. I'm sure there's some questions as we work our way over there. Let me go ahead and just, for all of you, every Tuesday, 1 o'clock Eastern, I lead our team here in a PPP weekly update. You can register by going to aprio.com/what's next. You can also find that's where we post all of our articles. You can sign up for our newsletters with the frequency of the changes in guidance. Those are coming out almost every 48 hours. You can access our prior webinars, content, or register for upcoming at aprio.com/what's next. I know that I saw an earlier question that says, where can we get assistance? Aprio does provide loan assistance. It is on a fee-for-service basis. If you are interested in reaching out to our team to understand how we can support you, you can go to aprio.com/forgiveness and schedule a time with one of our consultants to understand what opportunities are there to support you in navigating the Paycheck Protection Program. I'll turn it back over to you, Jennifer, for some Q&A.
Justin, excellent presentation. We thank you so much for that information. Very informative. So we have a couple of questions. One is, our company does accrual-based accounting in QuickBooks. The taxes are filed on a cash basis. Can we use the accrual-based gross receipts for 25% reduction in a financial quarter? You may see it in the Q&A or the chat. It's from Sam Johnson.
So I'll come back for a second because I think that's a great question. and this is the terms that you see here, right? In accordance with the entity's accounting method, regardless of form or source. To me, that doesn't indicate that the tax return is more authoritative than internal or vice versa. So I think that certainly would provide the opportunity for you to choose the one that would provide you the opportunity to qualify. It sounds like that may be your internal financial statements. Because again, that is in accordance with the accounting method you use to run your business. So very good question.
Okay, the next question is from Marcus. If most persons in an S Corp who are necessary to deliver the services are 1099 as a result of the business model, are those costs allowable for the PPP forgiveness program?
Another good question. Unfortunately, 1099s are not, you cannot use those costs when calculating your loan amount, and you also cannot use your PPP loan for paying 1099 contractors for forgiveness. It is only W-2 or unless they're owners that will qualify for the payroll costs as an employee.
Great, thank you. Donna, I'm going to ask you to join me. I can't see the questions, but I know that there are some in the queue.
Okay, thank you. Yes, I see there's some from Lisa Harewood. If you are a sole proprietor with a Schedule C, what is the 60-40 rule? If I don't have employees to pay, but I have a home office, can I use for rent and utilities? That I use for rent and utilities?
So I'll try to make it even easier for you, and I'll also answer that question. If you're a Schedule C filer, you're calculating your loan amount based on the Schedule C, right? It's that net profit. It's that line 31. That's the same documentation you later use to apply for forgiveness. You shouldn't even need to think about non-payroll costs because you would actually just submit your payroll tax or your income tax return right back to your lender when you apply for forgiveness. Just allow at least 10 weeks to have taken place, and that's all you would need to do if you don't have other employees. But to answer the question specifically, can you use home office expenses? You can, but think about that. You wouldn't want to substantiate this split, right? Because it's business use, just like you do on your personal income tax returns. You need to delineate between personal use and business use, so it could add a little complexity. Easiest option there, if it's just you, because the same calculation of that tax form is used to calculate your loan amount as it is to get to forgiveness. Just submit the Schedule C. Just give it 10 weeks after you receive your loan, and that's all you need to do.
Okay. All right. We've got some other Q&A. Hold on just a second. I think we got a little bit of technical things going on. All right. So from Fred Diaz, he said he thinks he may have missed the answer to this question, but does SBA debt relief, is that automatic or do you have to apply?
It's probably a Terry question, so Terry, correct me if I'm wrong here. I do not think that you have to apply. I think this is referring to this is the 6 months of payments that were made on certain Section 7A loans or 504 SBA loans.
Right.
It's now been extended. I think what's that, 3 months into 2021 now?
Yeah, 3 months for generally, and then those business borrowers that they consider particularly exceptionally hard hit would get another 5 months through the end of the fiscal year. So you would not have to apply for that. SBA would be sending those payments out automatically because they have the records of who the borrowers are.
Okay.
And I think, Terry, I'll speak from the CPA side. I believe it's my understanding, too, that those funds, that debt relief is taxable to the recipient.
Yeah, I don't think that got addressed in the latest legislation.
Yeah.
Okay. So from Al Middleton, to get average month payroll, can you use a different quarter than the one you used to show the more than 25% decline in revenue?
Yeah, so those are independent requirements. So the quarter you use, and I'll speak to the monthly, the quarter you use is at your election. Again, for most businesses, that is a calendar quarter. But for the average monthly payroll and calculating your maximum loan amount, you actually are going to take the entire year of 2019 or the entire year of 2020, divide it by 12, and then multiply by 2.5. Again, make sure you pay attention to that $100,000 limitation that I mentioned earlier, if that applies to your business. But you are taking the duration of that calendar year, divide by 12, multiply by 2.5. That dividing by 12 is what's determining the average monthly payroll.
Okay. All right, and then I think I see one more. Let me see. Let's see. We've got a couple more, and then we can begin to wrap up. So I am an S4, and I have 941 for payroll. This is from Anita David. I also took a few owner draws, distribution. Can I use both to calculate average payroll costs? Would I use K1s or bank deposits to demonstrate average payroll costs? You guys are really getting specific with Justin here.
Okay.
Thank you for your expertise, Justin. Apparently you have the expertise here. Okay, folks.
So we are, I'll tell you, we're used to it actually. I do webinars almost twice a day. I've got another one at 3 o'clock today on the program. So keep them coming. This is modest. I think that the most we've had in any one hour segment was about 1,300 questions come up.
Oh, wow.
So I appreciate this. For S Corps, it's the wages, right? So it's your W-2. The distributions that are being made are not considered payroll costs. It has to do with the taxability and what's the impact to the owner. And so it is specifically the W-2 wages that are paid to the owner, not the distributions when calculating payroll costs. Very good question, though.
Okay. And I think, let me see, I think we covered everybody. Aisha, you may want to stop putting that. We've already covered a lot of these questions. Okay. From Jalinda Miller, I think this is the final question. And if I haven't covered something, please put it in the Q&A so we can wrap up. But they said, did you say if your 2019 taxes line 31 is a negative amount, you cannot apply for a PPP?
Or go look for 2020. I know you haven't done your 2020 return yet. So if it's negative, though, whether that's great, you have the option, 2019 or 2020 can be used for calculating borrowing capacity. So in that situation, and if both of them are negative, you would not be eligible to obtain a PPP loan on line 31. That's correct. In the situation that was just asked, and I don't know your personal tax situation, no, I'm not asking either, but if your 2019 Schedule C line 31 was negative, work with either yourself or your advisor who's assisting in your tax preparation. What would a draft 2020 Schedule C look like, right? It doesn't have to be the filed version, but have that ready to go. That would be how you would calculate your borrowing capacity, and hopefully that would not also be a negative number. Otherwise, unfortunately, yes, you would be ineligible if both of those years were negative on line 31. Okay.
And then we missed a couple of earlier questions that are kind of general, maybe for Terry or Justin. I applied for the PPP. This is from Felicia recently and was immediately denied. Can I reapply? I fit under the regulations. I didn't understand why then it said I'd already applied and I hadn't.
Let's see. I'll take that.
Specifics. Yeah. Go ahead, Terry.
Yeah, I'll take that one. It sounds like we need to rectify why they thought you had already gotten the loan. And if actually, you know what I'll do is I'll put my contact information. If you can follow up with me, we can research that. But apart from clearing that up, say we clear it up and we determine you did not apply, there would be nothing to prevent you from applying in this round. So we'd have to get that clarified.
Okay, and then we'll wrap up with one more question. It says, my bankruptcy was recently dismissed. Will that hinder me from getting the PPP?
I would say no at this point.
I would agree.
Yeah.
Okay, great. One more thing. What's the difference between using 1099 and 941 for your application? And then that's going to be the last question.
So I think it depends on I guess who's making the ask, right? If you're the independent contractor, right, you receive a 1099. That's also what we think of as sole proprietors. We saw that being an accepted form from lenders previously. Now they are going to ask, more likely than not, for your Schedule C tax return, right? You're receiving the 1099 as the individual, or maybe you have your own LLC and you're receiving 1099s. That's different than if you as the business issue 1099s. Let's say, Terry, I'm going to pick on you here. So let's say I'm paying Terry via 1099. So in that situation, by definition, under the IRS guidance, Terry is not my employee. Terry is eligible to obtain her own PPP loan, and therefore I cannot claim the amount of compensation I pay Terry via 1099. So hopefully that provides a little bit of clarification, depending on which side of the 1099 you're on, as to who would apply and what form you would use when applying and calculating your loan amount.
And Justin, just so that I'm clear, because this question was asked earlier, but if I'm paying Terry through a 1099, if she's a contractor, but I have expenses in connection to her work, can I use those expenses? I think that was an earlier question. I just wanted to make sure I'm clear. So in my business, I'm paying her expenses to do the work, whatever that work is. Can I claim that for the application, or for forgiveness? I think that was the question.
I think it depends on where those expenses fall and what the expenses are. So if they're sitting within her 1099, they would not be eligible to be used by the business. But if they fit within, let's say the expenses are as reported, right? It's for rent or utilities. I don't know that mortgage interest would apply in that situation, or some of those expanded non-payroll costs, right? Our covered worker protection and property damage costs and operations costs, et cetera. It still has to fit within those categories to be eligible for forgiveness. If that was a direct payment made by the business for those purposes, that would also require that business entity name be listed on the invoice and be able to substantiate payment.
Okay, awesome. All right, well, we're going to have to wrap up. We did get one more from a Vincent Coulter, who is a nonprofit, which I'm not used, we haven't had any questions from nonprofits. So he's a small nonprofit which has received its first PPP loan, but has survived only with donations prior to 2020, yet has relied only on loans through PPP and private lender. What, if anything, qualifies as revenue for our donations received in 2019 versus no donations, or revenue other than the PP loan in 2020?
Sure.
And that's our last question.
So
I'll wrap up for sure.
That was a great point of clarification that was released by there was last guidance actually that was released on the 19th. We just issued an article about this 2 days ago. Not-for-profits, gross receipts, go to your 990. I think it's on page 9. That's your statement of revenue within your 990. It's effectively everything that's seen there from a gross standpoint. Membership dues, contributions, program services, fundraising events, investment income. This is particular exclusion for sales of assets. All of that does get included as gross receipts. Specifically to the comment about the PPP loan already received, that would not be included in gross receipts when you're evaluating that for purposes of your 2020 numbers.
All right. Well, we're going to wrap this up. Oh, my goodness. This was so much information and such expertise. As you guys can tell on the line, we're working on a partnership with Aprio so that we can bring you more information. Sorry about that. More information and more details and more expertise. And, of course, we continue our partnership with Terry and the SBA. I want to thank Stacy Key with the Georgia Minority Supply Development Council, and with Diane Matthews with the South Fulton Chamber of Commerce, who continue to be our partners to bring you this information. Just to wrap up, we will continue to bring information and education through our CARES Assistance Program. Our next webinar, which will be next Thursday on the 28th, is called Intro to OSHA for Small Businesses. Many people think of OSHA as the organization that, if you will, the agency and organization that oversees health and safety for construction and manufacturing. but there are quite a bit of compliance rules for small businesses under OSHA. And so we wanted to make sure that you're aware of the current rules and new rules and compliance requirements that you may need to meet. So we encourage you to sign up for our webinar for OSHA for small businesses. Again, we've got our CARES Act training and development series where we're focused on how you manage in a virtual environment, how you use new tools and virtual tools in this new environment, how you have more fun and get a bigger bang out of Zoom and all of these other virtual tools that we're using, as well as how you manage your employees and even yourself in this virtual environment. And then we had launched our Next Tech program in May of last year. And this is a program that we've been focusing on technology and innovation with corporations and federal agencies. So the federal agencies and corporations send us or provide challenges for us where they're looking for technology solutions, and we go out and find or send these challenges to MBEs across the country. You can then apply and come to the Next Tech meeting, listen to what the challenges are, and if you think that you have a technology or innovation solution for a particular challenge, then we match you with the federal agency or the corporation. Our next one is next January 26th, and it will be with the Air Force Research Laboratory. So we've got a number of challenges that they have provided for us that they're looking for technology solutions and innovation. So if you go to nexttechpitch.com, you can see all the challenges that we've had over the last year. And then finally, I just want to say thank you for joining us again. We will continue to bring you education and training and expertise. For all of you who've registered, you will get flyers or a communication about these upcoming events. So I think that Justin, what was your website again for the series that you do every week? If you could give us that again, I'd appreciate it. Sure. Because I think it's really, really important for our audience to take advantage of the expertise that you guys have been providing to everyone, including small businesses.
Sure. So I'm going to go ahead and I'll post it in the chat for everybody as well. There you go. Perfect. Even easier.
All right. So
every Tuesday at 1 o'clock Eastern, we were intending to stop this coming Tuesday, but obviously with the flurry of guidance that is still coming out, with origination still going on, and we just received new forgiveness forms 2 days ago, we thought we'd continue. So caprio.com/what's next. You can find all of our articles, content, and other things of that nature there, and register for email alerts as we produce them if you so choose.
Okay, and then as you all well know, with the SBA and Terry's, it's SBA.gov for the latest and greatest information. With that, I'll say thank you so much, and I appreciate your staying with us as we ran a little bit over today. Thank you for joining us, and have a great day.